I'm Charlotte McLeod with investingnews.com, and here today with me is Clem Chambers, CEO of anewfn.com. Thank you so much for being here. Great to have you back.
Yeah, great to be on again, Charlotte. It's always good to be on your show.
Really good to be speaking with you, and I think it's the perfect time. We've got a lot to go into today. Where I thought we could start is with silver. It's been quite a week for silver. It's been on the move, hitting new all-time highs. And I know you posted a video talking about how this looks like it could be a repricing moment for silver. So we'll get into that. But before we do, I wanted to ask, what do you think is behind this latest move in silver? What's driving this breakout?
Well, traditionally, silver is the fast horse in precious metals. But gold has gone on a run because it's very strategic in international stress. But of course, everybody sees gold. And as somebody posted on one of my videos, I'm thinking of buying copper bars and zinc bars. I can't afford gold, which of course is incorrect. You know, just because you can't buy a lump that big doesn't mean you can't buy a little piece. And, gold has got expensive, and gold has got expensive because governments are buying it. And, Wall Street and the market makers can't control governments. They can mess around with private investors, and they can, muck around with retail because they've got more clout. But when governments start to buy this stuff, they have to get out of the way, and they can't go shorting it and trying to manipulate the price. Because if China wants to buy it by the ton every other day of the week, it's going to buy it by the ton, and it's going to expect to be delivered. So, the people in Wall Street who are super smart, you might not like them, but they're not dumb. Get out of the way of that. Just let the demand and supply do its thing, and just take the spread and let them go. No messing around. So gold runs, and then retail, which is a silver buyer. And by retail, I mean us, not companies, not governments, retail, normal people in the streets. They go, okay, gold a bit expensive. I'll buy silver. And retail is a juggernaut. It's an absolute juggernaut. It was funny today because somebody said, would you do some work for me? And, I laughed. I said, well, you can pay me in gold. You can pay me for that sovereign. And then I looked at the price of sovereigns, and it had gone up from where I thought it was. I've got a lot of sovereigns and a lot of gold, but, I don't really necessarily track this stuff. It's going up. I don't need to sweat the price 5 times a day. It's just going where it's going to go. And, the price of a sovereign has got, I thought it was about 500, isn't it? It's 800. And, that shows you how much it's moved. And, where's the high price for gold? Probably, $8,000 an ounce. I would be thinking, I think I better sell now at that sort of level, which is a 2x from here, double. Yeah. But silver, you look at silver, and it could easily go to $100 an ounce. And again, there's old pilots and bold pilots, but not many bold pilots. I'm an old pilot, and I'm not very bold these days. And at, $80, $90, I'll be thinking about leaving. But the number that I keep thinking about is that they make 3,200 tons of gold every year. They make 25,000 tons of silver every year. That's only 8 times. Yeah. So, if that ratio of 80 to 1, which it likes to seem to hang around at 100 to 1 when it's out of fashion, could easily go down to 40 to 1, and gold could easily double. So that's a quadruple. So from here, you could be looking at 150, 160. That's a stretch, a big stretch, but I don't think 80 is a stretch at all. And I don't think 100 is, 100 is getting a little spicy. So retail sees it, and they see a big old coin. And in fact, I was at the gold messe from Saw Financial a few weeks ago, and they gave me a 1 ounce silver round with their logo printed on it. And I thought, it's a nice thing. It's a nice thing. You can buy a bar, whatever, 1,000 ounces. Okay, 40 grand, but it's a big old, 1,000 ounces is a lot of ounces. It's a big lump. And, you can get big lumps of silver, whereas you need a lot of money to have a big lump of gold. So that's why retail likes it. But retail has, let's just say, not quite so much nuance. That's the new word for it. It doesn't have so much nuance when it comes to price. And, B2B will never queue around the corner for an asset, but retail will. So, as the fast horse, silver has got really strong upside potential. And you've seen that it's broken out, whereas gold, platinum, palladium, and some other assets are still in a tight range, waiting for the news to come from the Fed that they're going to be dropping interest rates, waiting to work out what's next. They're actually poised to make a decision. The market is whether it should go the next leg or whether it's right at this sort of equilibrium price. Well, silver's gone through the equilibrium price. That was about $50 or $48. It's now 56 or 57 or whatever it is right now. So it's already run ahead of all the other precious metals, and literally it's run ahead. So the call is that the signal for gold, platinum, palladium to suddenly take a jump up, or has silver just, jumped off the starting blocks before the starting gun has gone off?
I think that's a great summary of what's happening there. And I want to take a little bit of a closer look at gold, platinum, palladium as well. Before we do, though, I want to ask about what we saw going on with the CME last week, because I think that seems to be when silver really started to move. And I think that people have questions in terms of, does that have something to do with what's going on? So how would you rank that in terms of silver factors right now? Is that important?
If that was the reason that silver really went on a run and was as why it's where it is today, then I would be bearish. I mean, servers blow up. Cloudflare blew up a few weeks ago and took half the internet down with it. Oh, it can't happen. It's redundant and it's distributed, and no, bang, down it goes. Yeah. Oh, we've got 3 sites and we've got magic technology that stops this happening. And nobody plugged the magic technology in, and the guy who was meant to switch it on was away, and it's misconfigured. Bang, down it goes. And it can never happen. We've spent millions making sure it can't happen. Bang, down it goes. So it's just complex systems. We have no single point of failure apart from the one we didn't know we had. Oh, bang, down it goes. And, as somebody that's been in this space for best part of 40 years almost, time and time again, it happens. Really, back in the day, I had a set of servers in Wall Street, and Wall Street had a server farm, as you might imagine. Back in the day when server farms were, and you could conceive of their size, whereas now it's like, half a county size. And they had, you got all your servers and all your racks and blah, blah, blah. And then you've got generators, and then you've got batteries. So power goes out, someone sticks a backhoe through a power cable outside or whatever. There's a power strike, lightning storm, whatever. Down it goes. Generators go and generate electricity for you. What could be better? Well, maybe those generators, maybe they won't work. So if they don't work, there's batteries, and that's got like a day's supply of power to this thing on batteries, car batteries, lead acid batteries, whatever. So someone switches electricity off. I don't know, somebody, threw the wrong switch. There was a thunderstorm. Anyway, electricity goes, generators go, whoop. No generators. Okay, well, at least there's the batteries. Oh, no, they're all flat. Nobody made sure they were charged. Down it went for a, best part of half a day. And I've had that a few times. One time there was a magic box of reconfiguring all the power. If the power went down, it would go clickety clack clack, and that would be that. And clickety clickety clack, if that wasn't, and clickety clack. Nobody configured the box. It wasn't configured. Nobody knew how to configure the box. They flew an engineer in from Canada to configure the box to London. Unfortunately, it went down on a Friday night when the markets were closed, and by Sunday night, the guy managed to get off the plane at Heathrow, get there, and gone, go, and it all came back. So, it's quite capable. It's just, it happens all the time. I used to run a financial website with data, and I think the London Stock Exchange went down 3 or 4 times in 10 years. But they always go down when the market gets hot. And the reason they go down when the market gets hot is because the servers get hot. Hey, we've got a system. It can take 25,000 orders per nanosecond. Yes. And we've tested it once. We did. Yes, we did. Oh, here comes half our amount. Bang. Oh, we thought about the burr. Oh, but that switch wasn't on, and that was, and it overheated, and then Fred was away, and la 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 la. So when we said 20,000, it still can, and it still may, but please don't send that along. So it happens, and so there'll be a big .com crash. Was an example that the London Stock Exchange will go down. 2008, They couldn't cope with the order flow. The equipment had never seen it. And of course, when you're doing, 50 silver contracts a minute, suddenly you're doing 50,000. Oh, bang, down go the servers. Oh, we didn't realize, our load balancer didn't load balance, and the thread didn't thread, and this, and then there's a fuse, but boom, boom. Time and time and time again. Time and time and time and time and time and time again. It will always happen. Cloudflare a few weeks ago. That is a global billion-dollar infrastructure provider. That is what they do. Boom, down it went. Yeah. So what happened at the CME doesn't take a Bond villain to do that. It takes a bit more traffic than normal. Something weird. Some guy didn't show up for work. Some update that wasn't checked properly. It's myriad of reasons, and it happens a lot. So don't get paranoid about evil forces. And of course, it will absolutely go down when the market is a fast market. That is the pinch point. And actually, one should bear that in mind. If you're a trader, you're imagining that this is going to go through the roof or through the floor, and your provider website goes down. Your broker, they can't cope with every Tom, Dick and Harry logging in trying to sell their Microsoft or buy their Microsoft. They just can't. It's just they're not configured for 50% of their customer base showing up. They're only configured for 2%. Yeah. So in real fast markets, you are actually in jeopardy. So it's always best to get in ahead of that if you think it's coming.
Yeah. Okay. I think I understand how you're explaining that right now. So these things can happen, but it does tend to happen when things are getting a little bit hot, which could be the case for silver. And so meanwhile, we've got silver with the retail crowd coming in, and you're talking about what's going on with gold. So gold hasn't been seeing that, of course, it's at historically high levels, but we haven't been seeing that same breakout in gold that we've been seeing in silver this week. And I think you mentioned that gold is more waiting for the next Fed meeting, and people are kind of waiting to see what happens there. So can you talk a little bit more about that? What do you think would be the trigger for gold's next move higher?
Well, gold is really just a thermostat of geopolitical stress, because it is the currency of conflict. Yeah, if you get into a punch up at any scale at all, people, particularly if you're losing that conflict, people won't take your paper, won't take your bonds, won't take your promises. They'll just take gold. And that's the same for everybody. And, ultimately, that applies to all countries. So if you are a country, any country you care to mention, and you're seeing, China tell Mr. Trump or President Trump a few days ago that they're going to have Taiwan, it's theirs. Excuse me. You don't mind, do you, too much? Because it's ours and we're having it. And you are, I don't know, Indonesia. You're going to go, I think we need to buy some gold. Chancellor, buy some gold, will you? Yeah, a couple more tons. And next week, a couple more. Yep, get some in, will you? Get some in, because gold is bullets. Yeah, so if you've got 138 countries, however many there are, going, he said what? Oh, no, and going out a few more hundred weights of gold, says Vanuatu. That mounts up, and that is demand that you can't fight. If retail suddenly gets a flea in its ear, we've got to buy gold. Let's buy some sovereigns. They just get pushed around. Or back in the day, you jump onto a site that sells gold coins and are out of stock. I want to buy some silver, out of stock. Yeah, you can do that to retail. But you can't do that to, Malaysia or India or Saudi Arabia or France or Poland, which is in the news saying, we're buying some gold. I wonder why. And that is the ultimate driver of all this. Yeah, because gold, everything else comes along with it. So that is the 800-pound gorilla. The fast horse is silver, which is a retail reaction to that. So, they're chipping away at it. They're chipping away at it. They're not going to stop chipping away with it. And at some point, whoever's bringing it in will say, we're running a bit low. And that demand will just push the price. And that's what's pushing the price. And, people go, don't say that about gold is full. Or, well, who's buying it? Who's the big buyer? China. Why would they be buying it? They've got loads of gold mines. They say, well, they don't want to have the dollar. Well, they probably haven't had the dollar for a long time. If I'm a country and I've got $500 billion of US dollars, okay? I just ring up an investment bank and say, yeah, hedge that for me, will you? And they go, yeah, sure, it takes a few days. Hedged. So that means I don't have it anymore. I might have it in my drawer. It's all, I've got $500 billion. Yeah, no, it's gone. It's all hedged. Yeah. So, they don't have to sell dollars to get gold to protect themselves from the dollar. But they want gold because you can't magic gold out of thin air. Hey, we'd like you to pay for these raw materials in gold, please. Oh, okay. Will you take a little letter that says I owe you? No. Would you put it on a battleship and sail it over, please? Oh, okay. That's how they used to do it in the Second World War, submarines or battleships. Yeah. And because gold is the currency of war. And we all know, you don't have to be a genius to know that global stress is going up and up and up and up and up. Now, if it pauses or people get distracted, nothing ever goes up in a straight line. It's pausing, it's repriced. And then someone will shout at somebody and it'll go, boom. Or someone will have a meeting and say, yeah, this 1,700 tons of gold we got, I think we need 2,000 or whatever. And they go, yeah, okay, boss, we'll buy 10 tons tomorrow and we'll buy another 10 tons on Friday and we'll buy another 10 tons on Monday. And suddenly it goes, and that's what's been going on. It is central bank, as if that's anything to do with money supply. It is government central strategic asset purchases that's doing this. And is there any reason that should go into reverse? No. I mean, not Russia or Ukraine. Even if they stop the war tomorrow, you're going to have Russia sat on that line of demarcation, looking over the barbed wire at Moldova and Poland and Estonia and Lithuania. So, that's not going to go away. And that's not even the big deal. Venezuela is not even the big deal. China v. America on conflict on any level. That's just huge. And that's what's driving gold, and everything else follows.
I remember from last time that idea that gold is the metal of war. And I was going to ask you, are there any particular flashpoints that you are going to be watching in 2026? It sounds like more though. Okay. All right.
It's just about Taiwan. Yeah. Now, Taiwan, if people aren't familiar with the history, when the Chiang Kai-shek and his crew, which the communists beat in their civil war, they jumped over the strait onto Taiwan and said, come and get us. And the communists went, don't see the point in that. We've got a whole country to rebuild and things to sort out. And Taiwan is unfortunately quite difficult to do anything about. Forget about it. And then, as time goes by, Taiwan says, America sticks its oar in, which why not? That's what America does with these things. And Taiwan says, we're an independent country. And China says, no, you're part of China. That's always been part of China. You belong to us. And they said, no, you don't. And that's the flashpoint. And China, I want to call him Xi, but President Xi has made it sort of like, that's the thing he's going to do. He's going to get Taiwan back. That's the thing I want to be in the history books that say, and Xi got back Taiwan. What to do? And that's his big thing. He's going to get back that bit of China that's floating out there and needs to be back in the motherland. Well, and they can probably do it now, but it's going to create an absolute storm if and when they try it. And it's meant to be 2027 because they're on record saying the People's Liberation Army will be ready in 2027. They don't actually say for what, but what else they're going to be ready for? Ready for a barbecue? Well, I suppose of sorts. And that is the flashpoint, because America can't say, well, we won't defend Taiwan because they promised to. But America's so reliant on China these days, and Trump is trying to get away from being so reliant on China. America has 4 manufacturers of 10-inch nails, apparently. Yeah. And most of them don't even make the shaft. They just buy that from China, make the end sharp and make the other end flat. Yeah. So when a country can't make 10-inch nails because it's made somewhere else, and that somewhere else is not going to be their friend, they got a big problem, right? Can't make light bulbs, probably can't make ships, not proper ones that, take containers. All those things that America relies on China for, which was a great idea, to spread the happiness and bring up their level of standard of living up, and everybody concentrate on what they're good at and let some other country do what they're good at. All that is gone by the board now. So the last, 50 years of economic development through America, well, that's drawing to a close. And the disruption from that and the geopolitical stress from that is driving all sorts of investment opportunities. I'm going to sound, rather ruthless, but that's about the only thing we can actually change is by actually playing in the market. And that's what's driving gold. That's what's driving silver. That's what's driving platinum, palladium. That will drive oil. It will drive, raw materials, strategic metals, all that good stuff. And a lot of this is going to be driven in commodities, because commodities is the base of the economic pyramid. And what's happened is the first world has gone, you can have that base of the economic pyramid over there. We'll just do the Facebook stuff and the clever stuff. And you do that and we'll do that and everything will be fine. Well, now it turns out that now you've got this huge, heavy pyramid on sticks and the base of it is gone. And if it stops producing what it produces, or they stop sending it to you, it's going to be very awkward. I mean, imagine a world without plastic toys for children. I mean, it's catastrophic, right?
I think I like that pyramid that you're talking about there. I think that helps to really visualize the situation. And I'm wondering, so we have this situation playing out. We know what flashpoints you're going to be watching. Gold and silver, certainly it sounds like you're bullish there, perhaps on other precious metals as well. But how else are you expressing these ideas in your portfolio? How are you building it in preparation for what's coming?
Well, interestingly, a lot of what goes on in the markets will inform you on what is going to go on in the markets. So, for example, if you are watching Lockheed Martin, as I was a few months ago, and suddenly it's going like that, you go, oh, no, that's not good. I think I better buy a little bit of that. Now, when I think it's called the Secretary of War now, which is all you really need to know, the Secretary of Defense became the Secretary of War. But when he was in Europe at the beginning of the year, he said what amounted to, we've got a problem in Asia, you've got to sort out Europe, i.e. Russia. And I went, oh, did he say that? Oh, I think I listened to that several times to make sure I didn't hear that back wrongly. Oh, no. I bought a lot of defense stocks and they all went, wow, funnily enough, right? But if American defense stocks suddenly started to go up and you weren't hearing any reason why, you could imply a few facts, couldn't you? You could go, oh, that's not good. And then you could say, okay, they're going up. Well, maybe I need to buy some of those. But, what's gold doing? Oh, that's going up too. Yeah. I do not sit in the halls of power. I'm not walking up and down number 10 Downing Street or the Elysee Palace or in the White House, with my ear to the door. But there's a lot of people that are. And they've got a lot of friends, and then those friends have got a lot of friends, and those friends have got a lot of friends of lots of friends. So when somebody says, oh, I'm really annoyed at, Ethiopia, yeah, the price of Ethiopian coffee goes up in a day or two, yeah. So you can actually see things develop and maybe not transpire in the markets themselves. So you can actually watch the American defense stocks, and I'm watching them because it will give me an advance warning about what might happen. It's 2026, and all of a sudden, all the military things start to march, and it's 2027 because she said it. Well, there we are. It's all the information you need to know. People should build up theories and then see if they start to pan out. Because a lot of people go, I'm going to buy aluminium because I like aluminium. Aluminium is going to go up. I don't really have any good reasons for that, but it's going to go up. They go in and then they thrash around trying to find the reasons why aluminium is going to go up. A mate told me it's going to go up, and now I'm wanting to see whether I'm right or not. It should be the other way around. Work out the idea of what could happen and then watch for it to start happening. And when it starts to happen, normally it's not going to stop happening, and then you can do your thing. So 2027, that they've said they want it back. And it's reported by Reuters that she actually said it to Trump Monday before last. Yeah. So that's a big, hairy deal. Taiwan is a big, hairy deal. What's going to happen when that occurs? Well, it's not going to occur overnight. The satellites are going to tell them when they're getting their boats out from from they've got, and people don't believe this until they actually look it up. Chinese have cliff climbing ships because Taiwan is surrounded by cliffs. There's like 3 beaches, and you don't want to land on 3 beaches, do you? I mean, that's not going to be good. So they built these, and you can just type into Google Chinese cliff climbing ships, and they're these military boats that are on legs, have legs, and big ramps that go on top of the cliffs because Taiwan's surrounded by cliffs. They've already built the ships to do it. I mean, it's not like thinking about it, right? But when they start, pulling those ships out from where they're washing them down or painting them in camo, people are going to be seeing that in ground control. Oh, they're painting it in camo. What do you think is going on? And the prices will move way before you see it in the newspapers. So, first of all, work out your theories and then look for evidence that it's actually starting to happen. And some of your theories will be rubbish and they'll never happen and they'll never be seeing evidence for it. But some of them, you'll say, oh, look at that happened. Oh, well, and you could be really, really early. And then you'll make a lot of money, right? Rather than being the last guy. All my friends told me they'd made a lot of money in this and I bought some and it's gone down. I mean, a lot of people get that one happening to them.
All right. So we can go the precious metals angle. We can do the defense stocks kind of angle. And you're also talking about the broader commodity space and how the US is looking to bring some of this mining and manufacturing back inside its own borders. So if somebody wanted to approach it from that kind of direction, what do you think would be the best way to do that?
I mean, the way I can only tell you the way I've done it. And the way I've done it is with ETF. Physical metal ETF, nothing levered, nothing that doesn't track. So, for example, if someone said to me, "There's this really great gold mine. It's Clem's gold mine," and I would go, "Oh, okay," and that'll do gold for you. I would get the physical gold price, and I'd run the chart of that mine next to it. And if gold goes up and it goes sideways, or gold goes down and it goes up, if it doesn't track, I wouldn't touch it with a 10-foot barge pole. Yeah, I want things that track the commodity. So maybe it should, if gold goes up 1, it should go up 1.5 or 2 even, because it's obviously levered because its profit margin goes up by the amount that gold has gone up, but its fixed costs don't go up. Well, with a bit of luck anyway. So with good assets, they track reality. So mining, it better track. Physical is physical. And then I just care about who's providing the physical ETF. Is it Mickey Mouse's ETF fund, or is it somebody, with a long track record and a huge, financial institution? And I don't really want to mess with anything that isn't, gold plated, triple starred. So, just go with the biggest, physical metal ETF. So that gives you a way of doing it. Now, if you want a bit of leverage, you can always, have a little bit of margin on your account, but I wouldn't do that either. So just get commodity ETFs, but study why. Absolutely study why. Why is copper going up? What's the supply of copper looking like, and how much they're going to need? I mean, just have to type in those questions actually into Google or into an AI. It will tell you, and you'll go, blooming, what? And you'll know you're on solid ground. Now, saying Clem said, that's no good at all. I should be raw material for people's thinking, not a tipster. I don't want to be a tipster. I say, go look it up. Go look up those cliff climbing ships. And if you don't find them, then, maybe I'm wrong. Maybe I'm trying to get you as exit liquidity for my massive bond villain positions. But, you're absolutely vital that you do the research. There's never been a better time with more tools. Don't listen to much opinion. Just look at the numbers and see what you think. And my high concept is there's not going to be any commodities, hard commodities, not going forward. They're going to be luxuries, because there's going to be such vast demand for lots of these primary so-called commodities that they're going to go up dramatically, because there's simply no way of keeping up with the demand that's coming. And you might say, what demand? We're going into recession, depression, everybody's unemployed. But AI is going to boil the oceans, and it's going to suck all these raw materials in, particularly copper, silver as well. Platinum and palladium will come along with it because of various other factors. So there's pretty not much in the way of commodities that will be able to keep up with what's going to come in the next 10 years in terms of demand for commodities. And there's potential for vast disruptions because of all these issues with China and America and supply chains and all that. So commodities this really is a so-called super cycle, but it's not even a cycle. The point is they are going to be in huge demand. Now, imagine Clem's got a copper deposit under my chair. Okay. It's an amazing copper deposit. It goes all the way to the center of the earth. It's incredible. It will take me 5 to 10 years to get the first copper bar out of that. That's how long it takes to get commodities out of the ground because of all the rules and regulations and all we don't like mines here. Yeah. All that stuff. Or, hey, this is our copper you just found. What's our copper doing under your land? It's just a nightmare mining. And, that means that it simply won't be able to keep up with the demand because there's vast lags. What's going to have to happen, and it will happen, these governments will have to say, yeah, when we said fill out those 10,000 pages of tick boxes, yeah, let's call it 500 pages. And they'll have to accelerate they'll have to deregulate mining. And America will probably be one of the first to do that. And because they simply have to take the brakes off on digging up all these commodities because the prices will go up so much and the demand for them will be so acute that they'll say, how do we get this? They won't be telling you to bring your copper pennies in for melting down, but they will be, really, really trying hard to find sources of more supply and quick. So, commodities are just going to go up a lot, but it's part of something that very controversial, what I'm about to say, because people think, he's on drugs, this guy. What's he talking about? And that is, there's going to be a massive economic boom made by AI because I'll go back to the basics. When I was a kid, I would watch television. It would say, the British economy is not very good at the moment. Productivity has not gone up. The key thing they watched was productivity because that's how you make stuff. If someone's got a little hammer and he makes 1 unit an hour, you give him a better hammer, he makes 2 units an hour. Now you've got economic growth. Now you've got more products. Now people can be paid more. The money can go round. And if you print some confetti to help the money go round because you've got more output, there's no inflation and everything's happy. Well, productivity, or, it's been going like that, they say. Productivity is not going up by much. Yeah, right. All those people on Facebook. Right. Anyway, AI is going to absolutely slingshot productivity. It's going to make it go because, we've all sat there and used it. It's a monster. I'm going to spend the next 45 minutes researching this fact on Google. Hello, ChatGPT. Can you give me that fact, please? There it is. I just saved 40 minutes. Yeah. Okay. For the first few weeks, you go back onto Google and say, blah, 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 blah. And there it is. And you go, okay, it's right. It took me 10 seconds to something that would have taken me 40 minutes. And that's a tip of an iceberg of productivity. And productivity equals, massive economic growth. And then all the raw materials are going to get sucked into that. And all the energy is going to get sucked into that. So energy is going to go through the roof. The price of energy, which is bad news for a lot of people, is going to go through the roof. And all electricity, because I can't just build a nuclear power plant. I mean, you've noticed how they want to build them now. And if you wondered why, hey, this was the worst thing in the world 5 years ago. Why you want to build lots of them for? I don't understand. Why would you want to? Well, they have to, don't they, for all the AI? If you haven't got electricity, you can't make AI. And if those blooming people over there that want to invade Taiwan are building it out and burning all the coal like they've been doing and burning all whatever they can get their hands on and building nuclear power stations and coal power stations 10 a penny, well, you're going to lose, aren't you? Because they're going to spend it all on AI and they're going to be smarter than you. Oh dear, they're smarter than us. What could possibly go wrong? So you've got to keep up with AI, infinite demand for energy, infinite demand for commodities, huge economic growth. We're going into a phase like no other. And there's huge opportunities for investors that can work it all out. That can not go, I'm totally scared now. It's the end of the world. You can go, I could make some money here. I could, yeah. Anybody prepared to do that is going to make it in spades over the next 5-10 years, or whatever they make it in, whatever the correct metaphor for that is. Make out like a bandit. Ooh, that doesn't sound so good either.
Really good to get those AI thoughts. And I have one follow-up because I think we're starting to see more headlines about an AI bubble, and are these stocks all going to come crashing down? So I wonder about your thoughts on that. Is this more of where, yeah, maybe the stocks are overvalued, but the technology, the underlying technology is going to be with us? How are you dealing with that?
If you're a stupid government, you will say, oh, this is all too expensive. Oh, it's going to melt the ice caps, this. Oh, I don't like this. Oh, it's going to put my bureaucrats out of a job. Oh, I don't know. And there will be countries that will do that. But if you're smart, you'll go, if I'm not the smartest country with AI in the world, I'm going to be bending the knee to who is. I don't want that. So who's going to be doing that? Oh, well, we can do it. We can let NASA do it and nothing will happen for 20 years. Or we can let the private sector do it. Yes. And what do they need? Lots of money. Okay, deal. I'll pull the lever and print lots and lots of money. Now, if I print loads and loads of money and I give it to people that want to go down the supermarket and buy more groceries, I'm going to get inflation. But I give money to people that build factories that are productive, that are generating huge productivity jumps. I think I can probably print about as much money as I need to print. It's like back in the day with the Industrial Revolution, they ran out of money. They literally ran out of money to power it because they used metals, and there was only a finite supply of metals. And yes, they did IOUs and all that good stuff. And yes, it really wasn't a currency-backed system. There was plenty of leverage in that. But even the fact that there was the base level were commodities, gold, silver, copper, it choked off the growth quite often. And they had terrible periods of deflation and depression because they couldn't make enough money to keep up with the technological boom. There's no such limitation in our economy. Now, that could generate inflation in certain places. And I'm sure when the billionaires are living in their anti-gravity cities floating in the clouds, the price of real estate up there will be expensive. So, there will be inflation. Rich man's assets will undoubtedly get expensive. Energy is going to get way expensive. And there will be inflation. So that's something to be bear in mind. But they'll just print. And there's something that's coming up, which I haven't worked out fully yet. And I just throw this out to the viewers to think about. There might be a shortage of money supply because they might be borrowing all the money that can be borrowed. So you won't get it. I want to borrow some money. No. Nvidia's borrowed it. Oh, what about some of that money? No. Microsoft's borrowed it and they've given it to OpenAI and they borrowed some too. And they're building this huge plant the size of Carolina for AI because the government don't want to lose to China in an AI war. Yeah. But the AI will go straight into productive things. Automating factories. I mean, that's the strategy. Hey, we need to import loads of people from abroad. Oh, why is that? Well, we need someone to work at low wages in our factories. I think we've got a better idea. Oh, what's that? We're going to have robots do that. Oh, really? Oh, that's a bit ambitious. Yep, it's ambitious. And that's their thinking, right? I mean, they actually said it. I think Besson actually said it. Oh, we're going to have factories full of robots. Oh, okay. How's that going to work then? Well, AI, robots. It's out there. You see them already, right? So we're already on YouTube. Go watch them. Okay. So why are you doing that? Well, that's the only way we can get back and be better than China, isn't it? And their robots are pretty impressive and their AI is pretty impressive and they're making all our stuff at the moment. We have to stop that. So that's what's pushing this. And they're not going to stop pushing it because they're not going to bend the knee to China. China's got 1 billion people. Yeah. And they're catching up pretty quick. And they're only so far behind, like, I don't know, get paid 40% of what the average American gets paid. It used to be, when I was a kid, when I started in business in the early 80s, the average Chinese salary was $200 a year. It's now 15,000. Okay. So, that's what's driving this. That's what's driving gold. That's what will drive commodities. That's what's going to drive the stock market. That's what's going to drive everything. And hopefully that competition will stay at that level. Because that would be fine. Everybody would be happy. But, that's not necessarily going to happen. But that is what drives everything. And if you are scared by it and think it's not going to happen and you're just going to sit back and go, this is all a bad dream, I don't want anything to do with it, I think those people are going to really find themselves high and dry. And you can see that on the internet. Oh, it's not fair. I haven't made any money in the stock market. Well, have you got any in the stock market? No, I've been scared by the media for the last 15 years. And people will be in that same position with AI. Oh, I've got no money and everybody's making it and I'm not. Are you using AI? Did you get into AI? Did you learn about AI? No, it's rubbish. That is. And these people that made all the money and are rich and got fantastic jobs and are really, motoring in AI. What do you think about that then? Oh, it's all wrong. It's all wrong. It's not fair, mummy. And, that's a big risk for a lot of people. Big, big risk. Not one that I have, but, there's going to be generational wealth to be made in that sector for those that really want to, grab hold of it.
Yeah, I think that's right. You have to be in if you want to take advantage of these things. I think you've given us really, really a lot to think about. And as we're starting to wrap up, I wanted to ask you, I think it's a fun question. I've been trying to ask this one to everybody as we head toward 2026, but what would your pick be for top performing asset of next year? It doesn't have to be a commodity, but of course it can.
You see, I'm a diversified portfolio guy. Okay. And I like to say, this is really, really great, but I might be wrong. And generally speaking, that gives me a great return because when something is, here you go. Actually, it's come into my head. I think Intel is going to be doing exceptionally well. It's got another 50% easy in it next year, maybe 100% even. It's when I started to tell everybody about it at $20, it's doubled since then, and it's made me very happy. But I think it's got $60 in it quite easily. And if you look at those chip people, it's 3 times sales is Intel. Okay. If you look at Nvidia, it's 65 times sales. AMD's whatever it's 20 times sales, 30 times sales. Broadcom, blah 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 blah. You go look at the sales multiples. So Intel could easily be 10x. Now you can say Intel's this shaggy dog and what a load of rubbish. But if you actually listen back to President Trump and the Secretary of War, et cetera, they're talking about onshoring. Well, AI, who makes AI? You might say Nvidia makes it, but who makes their boxes that do it? Well, it's all done in Taiwan or China. That's not so good. How about all the other people? Taiwan, China. Who's got fabs in America? Oh, all those people, they sold their fabs. They said they didn't want it. That was dirty business. They just wanted to do the clever stuff. And that's all the dirty stuff's going to be made in Taiwan and China. What dirty stuff like Intel do? Yeah. Intel's the only people with fabs in America, really. Oh, how sad that is. Oh, and what about Europe? What have they got in the way of fabs? Oh, they're all Intel as well, give or take. Okay. And now they've all got to onshore it into America, haven't they? Because if you're making your stuff in Taiwan and they cut that cord, you're toast. So how long does it take to make a fab? 3, 4, 5 years, bit like a copper mine. Okay. So who got fabs? Intel. Oh, and they're cheapest chips. Yep. Or literally cheapest chips. So Intel is basically, that's why the American government came in and said, yes, 10% please. Thank you. Investment. Ka-ching. Yeah, because they've got the fabs. Without the fabs, what are you going to do for chips? In all your rockets that can't fly now because they haven't got chips. All your planes that can't fly and all your GPSs and all that magical technology that's meant to put you in front of everybody. Somebody else over far, far away is making them all. So who can make them in America? Right now, the 800-pound gorilla of fabs in Europe and America is Intel. And that's why the American government has invested. And that's why they've gone from saying, Trump said, that guy, he's Chinese. I don't like him being the boss. Oh, he's come and see me. He's a great guy. We're going to buy 10% of Intel. Yeah. So, if you drill down into that crazy randomness as it appears, and you strip away the noise and blow a bit of dust off it and take a bit of flaky material away, you're left with Intel is really the only thing right now that American rely upon in terms of fabricating chips. Well, that makes it a lot more valuable than it is today.
Yeah. I think that makes a good case for Intel. And I'll let you go. One final question. What would be your best advice for investors as we head into the new year?
I don't advise investors, but I would say the best thing to do is don't take advice. Study Study, 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 study. Have an independent mind. Ignore the noise and study, and have an independent mind. You know, all the books in the world out there written by geniuses in the market for the last 100 years. You know, you can buy books written by Buffett's daughter-in-law about Buffett. You can buy all sorts of books on, you know, the guy that invented ETFs, you know, all those guys, really, really solid, brilliant guys that did really, really solid investment. Peter Lynch, Random Walk Down Wall Street, all that stuff. It's all there. It's like 5 books. I mean, you know, if you've got a book, the definitive book, if you read The Intelligent Investor 5 times, you'll do great. You'll do absolutely great. And you would never have to listen to me, and you do something completely different from what I'm doing, and you'll do really well.
I really like that. I think you turned it on its head, but it makes a lot of sense. So thank you so much for coming on today to go over gold and silver and so much more. This was great, and looking forward to having you back again in the new year.
Can't wait. I look forward to it.
Amazing. Well, for now, I'm Charlotte McLeod with investingnews.com, and this is Clem Chambers with anewfn.com.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.